Alright, so let's talk about Nvidia's quarter. It was the most anticipated earnings this week, obviously with everything that's going on in the macroeconomic environment. A lot of focus has been put on Nvidia and how they will guide for next quarter. Obviously, we don't get full year numbers, but for next quarter. So I did a poll earlier today. Are they going to miss? Are they going to beat? And if they are going to beat, with higher guidance or lower guidance? Well, they beat, but they lowered guidance. Now there is a logical explanation there. We're going to talk about that in this video. If you just want to hear the basic numbers and then just want to skip the whole video. So basically they beat on earnings per share, most of it, yeah, great. For guidance, lowered revenue guidance because they do expect around $500 million of a hit from the China lockdowns and from Russia. Now they're not selling to Russia anymore, and Russia is about 2% of the company's revenue. So that's where they see the hit coming from. Now with regards to gaming, data centers, etc., if you're interested in that, sit back and have a listen. Now, if you do want to support this channel, check out the link in the description to receive the top 10 best stocks to buy now, or visit fool.com/couchinvestor. So as always, we have this nice little summary here. And as I said in my last video preparing for this Nvidia earnings report, I said that data centers is going to catch up gaming segment sooner rather than later. And I am correct. Gaming is a bit slowing down when compared to data centers. The data center is probably going to be their biggest segment by next quarter, and then just going to grow each and every quarter and stay the biggest segment for the company in years to come. Now, professional visualization is actually down quarter over quarter, which to me was a bit of a surprise, but year over year still doubled. So that's great. Well, not doubled, but close enough, right? 372 million, now we're at 622. I was looking at the 307 before. Then auto sequentially, so quarter over quarter, yes, it's up a little bit. Year over year, it's still down. It's still a very, very small segment and really, really difficult to predict what will happen with that segment. Because you can see, you would have thought that auto, with every major manufacturer out there going into EVs, autonomous vehicles, etc., that it would have been growing quite nicely, but it's actually been up, down, and then down, down, down. Now for OEM and others, it's also down year over year and quarter over quarter. Mainly, they say, and we're going to have a look a bit later, is because of the cryptocurrency stuff. Now totally, it came in at $8.28 billion, and that beat the consensus of 8.12. So a 2.1% beat there, quite nice. For gaming, it's a 4.6% beat. Market expected $3.46 billion. For data centers, the market expected $3.6 billion, so they beat on that as well. Now for professional visualization and auto, it actually missed. The market expected 632, and for auto 143, so little misses here, 1.6 and 3.5%. But overall, these were the numbers, right? Revenue grew 46% year over year and 8% quarter over quarter. Gross margin is up 90 basis points year over year and 10 quarter over quarter. It also beat the expectations by just 22 basis points. Now it's at 67.1%, non-GAAP that is. Operating expenses is up 35% year over year. Operating income is up 55% year over year, so that's quite nice. And net income is up 49% year over year, 3% quarter over quarter. Diluted earnings per share of $1.36, and that's also up 49%. Now, the estimates were $1.30, so a little bit here as well. Quick note here on the gaming segment, because that's a segment that will probably be taking a hit in the later stages this year. So as we've seen, gaming revenue was up 31% year over year, 6% sequentially. Now that reflects the year over year increase, reflects higher sales of GeForce GPUs based on their Nvidia Ampere architecture. The sequential increase was driven by higher sales of GeForce GPUs for laptops and SoC system on chips for game consoles. Now, here comes the cryptocurrency part. So their GPUs are capable of cryptocurrency mining, though they have limited visibility into how much this impacts their overall GPU demand. Now, with the current volatility in the cryptocurrency market, such as the recent declines or changes in methods of verifying transactions, including proof of work, proof of stake, can impact demand for our products and our ability to accurately estimate it. Now, if you remember back in 2018, that was exactly the same scenario, right? We saw this huge crypto bull run and then a huge crash. If you look at the Nvidia chart, it crashed as well. And as I said before, the OEM and other revenue, that's down 52% year over year and 18% sequentially. The year over year decrease was due to a decline in cryptocurrency mining processor, which was nominal in the quarter compared with $155 million from a year ago. The sequential decrease was driven by lower entry-level notebook GPU sales. Now a quick look at expenses, because remember, they did have to pay a $1.35 billion acquisition termination charge related to the ARM acquisition. So that's why you see a huge increase here in GAAP operating expenses. If you look at the non-GAAP operating expenses, it's, well, I won't say only, but it's up 35% from a year ago and 11% sequentially. And as with most companies these days, and as we mentioned in the last video, these increases were driven by employee growth, compensation-related costs, and engineering development costs. Now, they also have been successful in hiring this year and expect to slow hiring in the second half of fiscal 2023 as they integrate their new employees. Basically a nicer way to say we overhired and we need to stop spending so much on that part of the business. As for cash, they've got plenty of it, $20.34 billion. That's up from $12.67 billion a year ago, but down quarter over quarter. Last quarter was $21.21 billion. Now, cash really isn't the problem here. Cash flow from operation activities was $1.73 billion. That's down a little bit, but nothing to be worried about here. Free cash flow was $1.35 billion. That's also down from $1.56 billion just a year ago and down from $2.74 billion a quarter ago. Now, during the first quarter of fiscal 2023, Nvidia returned $2.1 billion to shareholders in the form of share repurchases and cash dividends. Yes, Nvidia does pay a dividend of just about 4 cents or so not that much. They also said that on May 23rd, 2022, the board of directors increased and extended their share repurchase program to repurchase additional common stock to a total of $15 billion through December 2023. Now, you don't increase if you think your stock is overvalued. You do increase when you think your stock is undervalued. And now the main reason why the stock is actually down 6 to 7% when I'm filming this is because of outlook. So they expect revenue to come in at $8.1 billion plus minus 2%. This includes an estimated reduction of approximately $500 million relating to Russia and the COVID lockdowns in China, as mentioned before. Now, the estimates were $8.44 billion, so they missed it by around 4% or so. As for non-GAAP gross margin, 67.1%, that's ahead of expectations, so fine on that front. But with regards to gross profit, operating income, and operating margin, that's all below the street's estimates. All right, now a couple of things I've heard on the earnings call. I skipped the end of it because, well, I heard everything I needed to hear. Now I want to talk about professional visualization. My favorite part of it is obviously Omniverse. Now Omniverse is run by Nvidia's AI. Nvidia's AI is going to be a huge part of the revenue side of the business for years and years to come. Yes, right now it's still small, but the company is extremely confident that this segment, Nvidia's AI, Omniverse, is going to generate a lot of revenue in the years to come with high margins. Because remember, Nvidia used to sell hardware. Now they're also selling software, and software is always with higher margins. So as for Omniverse here, they had a couple of announcements. So they announced the Omniverse cloud service for instant access to Nvidia Omniverse. I believe they said something like 10% of the top 100 companies around use Omniverse today, and that number will probably grow in the years to come. They also announced that Amazon Robotics is building AI-enabled digital twins of its warehouses. We've talked about that in a couple of videos already on this channel. using Omniverse Enterprise to optimize warehouse design and train more intelligent robotic solutions. And now with regards to the lower sell-through in gaming and the reduced guidance for next quarter, is it a demand problem or is it a supply problem? So specifically for gaming, they said, because with data center, they're extremely confident in that. They think it's going to grow sequentially as well. But the gaming side, first up, with China, it's a demand and supply issue right now. For supply, obviously with all the lockdowns, shipping, etc., it's a problem, manufacturing, etc. It's an issue. Now the demand, they said, is also an issue because with all the lockdowns now, people are prioritizing other things. Government are focusing on other stuff rather than obviously gaming. So they said it's supply and demand issue. Now with Russia, like I said at the start of this video, they're not selling to Russia anymore, and Russia is 2% of the company's revenue. So that's why they take a huge hit there. So overall, to conclude, while outlook might be reduced and they're taking a hit, they mentioned why. There's really no reason to be bearish on Nvidia today. The stock is down 45% since all-time highs. Yes, it was extremely expensive then. If you look at their peers, obviously in the semiconductor industry, super high multiple. But then again, the reason why these quality companies trade at a higher multiple is because, well, why would people like to sell quality names? Just doesn't make sense. Granted, you shouldn't buy companies that are trading at 100, 200 times sales, etc., which aren't growing much. But if companies are growing 50%, 60%, 70% year over year, why the heck not? You don't have to jump in completely and finish your position in a day or two. Build up that position in your portfolio, and in the long term, you'll do just fine. And a company like Nvidia, as you know, it's in my second part of the portfolio. You can find it on stockcar.io. It's free to follow, and we're gonna start a competition pretty soon, so you better sign up. Now it's part of that portfolio because, well, who doesn't want to own Nvidia, right? And as we see with AMD, data center side of the business is booming there as well. And to be honest, I don't really see that slowing down anytime soon, even with the current inflation, recession fears, etc. Good businesses will still perform very, very well. So nothing to be worried about here. I know the thumbnail said game over, but it's also a play on the gaming side of the business. I hope you understand that. Now do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. Check out those two videos, and I see you all in the next video. Bye bye.